Our last copper story, but by no means least, is the very significant MetalsX, an established copper producer, but with significant upside. Would you please join me in welcoming Managing Director of MetalsX, Warren Hallam.
So we're a top 10 copper producer, top 10 tin producer. We're also in the world. We're also a top 10 copper producer in Australia. So in the tin operations, we're currently running around 7,000 tonnes of tin production. We're running about a $9,000 cash margin on that, so we're generating around sort of $60 million. We have been putting a bit of investment back in over the last 12 months, which all is completed in the next month, which is a 15 to 20% expansion on that. So we'll come out around the next financial year generating around, it's a 50-50 joint venture. The operation will generate about $80 million of cash flow, of which our share is about $40 million. Then we have a significant copper asset, which is the Nifty copper mine. We bought this about 18 months ago, and we've been busy trying to piece it all back together. We've now rebuilt all the equipment, refurbished all the infrastructure, and now we're starting to basically ramp up production. And the objective really is, this is the biggest leverage in the company. Over the next 6 months, we'll basically double production from where we are today, from 20,000 tonnes of copper per annum to about 40,000 tonnes of copper. And we'd anticipate to be generating around $80 to $100 million of cash flow from that asset as well. And then we have, as I said, the largest undeveloped nickel cobalt deposit in Australia, which I'll talk to soon. We have a strong balance sheet. We have no debt. We have about $85 million of cash and working capital. Our structure, basically a market cap of $540 million, an EV of 455, which is pretty good considering that we'd anticipate generating in the 2019, we should be generating well over $100 million of cash flow. Some very strong support: APAC Resources, BlackRock, Jinchuan, the largest nickel producer in China, major shareholder of MetalsX, Ausbil, Credit Suisse, and Industrial Super. So, going on to the copper asset, as I said, we brought this in 2016. We picked up a 2.5 million tonne nameplate capacity processing plant. It can run up to around 2.8, 2.9 million tonnes. Underground crusher conveyor system around 3.5 million tonnes. The outcome here, though, it had 1 year reserve left. It was running about 1.5 million tonnes, so it was pretty obvious all we had to do really is open up the mine, get more mining fronts going, do some exploration, basically breathe some life back into it, and then double the production. Because large fixed costs, there's well over $350 million of sunk capital in this process plant and the underground itself. And then we also have another project 80 kilometres away, which already contains 500,000 tonnes of copper as well, which we're looking at doing the metallurgy process flow sheet at the moment, and we'll probably come out with some scoping early next year. So what's it look like? This is a Nifty fly-through. So you come in, there's a fully bitumised airport, 400-man camp. This was originally sort of 300 man. The previous owners added another few hundred rooms, plenty of flavours of ice cream. You got, this is the old, it started off, Western Mining started this as a solvent extraction electro-winning plant with the heap leaches. That's just the waste dumps. That's the original pit, which was an oxide pit. That's basically been on care and maintenance now. There's an XXEW plant there, 25,000 tonnes of cathode capacity. There's still 18.5 million tonnes of heaps there at 0.6% copper free on surface. So that's for a future expansion there as well. Then there's the process plant. We're just flying over there now, and then going underground is the conveyor system runs through the backs of the decline or in the roof, and there's an underground crusher. As I said, that system is capable of 3.5 million tonnes. So this is what the ore body looks like. It's only been mined over 600 metres. It's produced 20 million tonnes at 2.49% out of that 600 metres. So our first objective was to come in here and drill to the west, drill to the east. So we drilled a couple of 100 metres to the west, and obviously that's all starting to come through the process now. In October last year, we came out with a 6-year reserve. We have about an 18-year resource. We've now infill drilled about 95% of that reserve as well. We're now starting to understand all the structures and how this is controlled. The next step is to put a drive off the bottom there and fan holes up and down in that process to basically define the next 500 metres of this. In addition to that, we said, okay, this ore body's basically plunging at 15 degrees. It's a bit like a ship. In the keel's the main high grade. Let's go and drill a hole 1 kilometre away, if we really believe that theory. And so we drilled, so far, we drilled 8 holes there and hit mineralisation in the first hole of about 30 metres. So we know that it continues a kilometre, so what I'm trying to say is that it's been mined over 600 metres. We now have defined over 2 kilometres. So we know that we're there, and from all the exploration that we've done, we've now put 60,000 metres of drilling into this, and we'll continue to do so until we're absolutely satisfied that we've got a long life mine here. So that's just the shells of what it looks like. As I said, the higher grade material basically follows the keel, which means that as we step out further down plunge, we'd anticipate to continue that process. And then on a regional basis, we actually have 240 kilometres of in the Patterson formation, which is considered very similar to the Zambia belt. It hasn't really been explored since Western mining days in the late 80s. And there's lots of nifty lookalikes. There's significant targets and resources. I'll come back to that shortly. So what have we done? Basically what we've done is bring the reserves back 6 years. We've refurbished the underground system. We've refurbished all the other infrastructure. We've rebuilt all the equipment. We've bought a couple of new pieces. That's all sort of starting to work now. And then in this quarter, we're starting to now bring on those tonnes. So the objective here is that in the next quarter, not this quarter, the next quarter, we should be at 35,000 tonne copper run rate. And then by the end of the year, we'll be around 40,000 tonnes a run rate. So what happens then is that the total costs drop right down to around $2 a pound. So about $1 US a pound. And we're producing 40,000 tonnes, we'll be producing about 90 million pounds of copper. So it's the leverage in the next 6 months is very significant in the company. This is just an example of what we picked up. This is the geology models. The top 2 slides are what we inherited as the models, and now we've infill drilled the resource, and you can see here. We'd drive out here expecting to find some ore, and it wasn't there. It was somewhere else. So that's why we then ended up infill drilling all of this and actually understanding it. And what we've found is that we're now clear about these structures that occur in here and how they basically control the ore body and everything else. So we're very confident now that we can go out there, we'll put our infrastructure in the right spots, so we can find the ore in the right spots and everything else. This is just our stoping plan over the next 18 months. This is the historical area in here. And this is all the areas outside. There's probably about 7 million tonnes just sitting in those blocks there. So that's what our focus is, to bring on that tonnage. And as I said, we're a long way down that path. We've already started a couple of these stopes. We've also put a raised bore machine up there to speed up the slots. We've looked at every other avenue to try and speed this up as quickly as we can. So this is basically what I was talking about before. These are 20 kilometres each. This is the defined, these are actually results. The red is the copper. The blue-green is all the anomalies associated with lead zinc. So it's easy to show, I suppose, on here. You lose it on the scale, but that's about 8 by 8 kilometres anomaly. Defined anomaly. It's actually results from RC drilling, from geochemistry, etc. And this is Nifty sitting here. We've got a few lookalikes. We're starting to see these cross structures coming through here as well. So we've just been bringing all the data sets together. We're finding down at Maroochydore, which is just off the page here, we found there was 25,000 metres drilled by Mount Isa that wasn't even in the database. So we just bring all that information together, and we'll really start to push forward with the exploration here as well. But we're pretty convinced that there will be another Nifty here. This is Maroochydore. Maroochydore, basically 500,000 tonnes. We've done some met drilling. We're defining the process. This is mainly oxides, but we know underneath this is the sulphides. We've got 49 million tonnes of resource in this. Only 5 million tonnes is the sulphide. So there's really two projects in one. One is basically to define the process flow sheet for the oxides, and then also underneath that we'd anticipate to find the sulphides. And what we produce is a concentrate, and that concentrate would then go through the SXEW plant that we already have on care and maintenance at Nifty. So a reasonably cheap startup process on that. Moving on to Tasmania, another massive system, a couple of kilometres across, a couple of kilometres down, across a couple of kilometres across section. So massive deposit, it's been around for 3 centuries. We just keep adding to it. It's 8-year reserve now, 18-year resource, and everywhere we drill, we just keep finding the ore. I haven't really got time to spend much on the tin market, except to say that right now on LME and Shanghai stocks, there's only 10 days of supply, and so the market's very, very tight. Rio Tinto's just done a study. Some people have probably seen this, but tin came out as being the most affected by new technology, because it doesn't matter what battery you've got. At the end of the day, you've still got to connect the battery to the power leads and everything else, because basically 60% of tin's still in solders. That's the main consumption of it. So we're just putting in ore sorting. This is our expansion process. The ore sorting is pretty neat. What happens here is that the ore just comes down. It physically goes through an X-ray machine. So it's exactly the same as X-raying your arm. It just works out the density. It says, well, is that ore or is that not ore? What happens is there's a whole bunch of air jets. If it's waste, it just flicks it off. If it's ore, then it just drops off the conveyor system, and it just separates that. So what this has allowed us to do is to go from 7,000 tonnes of production to about 8,500 tonnes of tin production. And we hadn't had to spend anything on the process plant, because all we do is expand the mine, throw away a couple 100,000 tonnes of waste, and the process plant basically sees the same ore, it's just a higher grade. And then we also have another project internally, which is Rentails, which is treating all the historical tailings. This is a super project. It's 37% IRRs. Yeah, that's pre-tax, but it's still 30% after tax. It does require $200 million, but it's got a cash margin of 100%. So the operating cost of 13.5. The current tin price is 27.5. So this is in EPA approval at the moment, and we expect to have that towards the end of the year. Then we have the largest undeveloped nickel, cobalt, scandium deposit in Australia, top 10 in the world. And we've been working through this process. It's been through a feasibility study. We have EPA approval. We have agreements with the traditional owners, etc. So the only hurdle on this has obviously been the tin price, the nickel price, and also there's a massive capital hurdle, which is $2.5 billion to build this. So we've been obviously working in the last nickel cycle was to bring towards a consortium of obviously people with a bit deeper pockets than us. And then we've started to brush that off, and we're starting to talk to all of those investors again right now. So they're the obvious companies, the big stainless steel producers, China, Korea, and Japan. So where do we sit? Wingalina. This is Sunrise. We hear a lot about this clean tech's project. We definitely have the largest. They say they have the highest grade cobalt, and our view is that yes, we also have the largest deposit. And then if we high grade it, we certainly can sit down in the tonnes, but obviously the grade's quite good. So We've also only explored 25% of that. That's Wingalina. We've got 100 kilometres of contact zone, and so we know we can add it. We did a small program up here, and we added 30 million tonnes of ore in a 5,000 tonne drill program. So we know we can keep adding it. It's just that we got to 51 years of resource and said, well, there's no point adding, spending shareholders' money. So what we've been doing is also we've just looked at the high-grade options with the cobalt, and that's coincidental with the nickel. All that does is bring forward the cash flow and improve the economics even further. It's also looking at maybe we go for a more scaled-down option rather than 2.5 billion. We look at something that's more modest and start up smaller and then we'll work through that. In addition to that, we've also kept up with everyone else and we're producing some nickel sulphate and cobalt sulphate. These are results from, they're the, can't go back. They're the results from 2 weeks ago. So the nickel crystals, sulphate crystals and cobalt sulphate crystals, which Beaumont Thompson would be very proud of. And then, so in the end, anyway, we've got these 3 world-class assets, 2 in production already, some significant leverage coming out of our copper business over the next 6 months, from basically break even to close to $100 million of cash flow. Good cash flow coming out of our tin business, and then one of the largest undeveloped nickel deposits in the world, and a couple of organic growths in our tin and in our copper business. So thank you very much.